Mic check, mic check. What's going on, everyone? This is Jordan with Conquering the Markets, getting ready here for our live session. Good morning, good afternoon, good evening, wherever you are in the world. I am so glad that you're here. It is time to get into it. Fabi and I agree. There's no question. Honey mood sets the tone for what's ahead. It actually encompasses so much to so many. And depending on where you joined us, how long you've been a Bitcoiner, how long you've been into the markets, it's going to at different times produce different memories within you, but it does help me prepare above and beyond anything else for the session ahead. We're going to have a good one here today. We are looking at the Fed yesterday, likely having moved towards a pause. Now, Powell did not explicitly say that will be the last hike of the tightening cycle. The door is open for the June meeting. Tomorrow, we're looking at non-farm payrolls. That could set the probabilities of either a cut, a pause, or a hike into June on the table. CPI this month could do the same. We're looking at, of course, today, regional banks under pressure. The pause is such a pivotal moment in the cycle. When I talk about cycle, I'm talking about the Fed cycle. I'm talking about from the time that the Fed, let's say, begins interest rates as close to zero as possible, and they have to start quantitative easing. From quantitative easing, the Fed moves towards the next portion of the cycle, and that is a reduction of the program. It's called tapering down. They just don't take it all away at once. And then from that point, they want just like they want to get interest rates down to zero before starting quantitative easing. Before they start raising rates, they also want to get the quantitative easing program ceased and or stopped. And then the rate hikes begin. If you notice that markets, not just Bitcoin, November 2021, equity markets, December 2021, markets topped at the point, not that the Fed began hiking rates. They began as the Fed signaled that they were going to be tapering down their quantitative easing purchases, front running. The markets this time have not bottomed when the rate hike stopped. If yesterday was the last rate hike, the markets have not bottomed. The market bottomed when we saw that inflation, first of all, was beginning to roll over, and that the Fed, because of that, starting doing a lesser degree of rate hikes. So that's much different than what you saw in the previous cycle, where you saw both Bitcoin and equity markets find a bottom on the last hike, and that's where markets began to rally. So that's something different. And because we're at a critical junction of the cycle, that the Fed is, whether or not they just put in the last hike of the cycle, or that's coming up either in June or the meeting after it, we're getting close, and how the market reacts is an important tell. Right now, all we could say, it's too soon. The markets are a bit cautious. The markets didn't sniff out that was the last hike yesterday and begin rallying, right? They did do that in December 2018. On the last hike, they sniffed it out really quick, and then they began rallying. So when I see the market here pause for a bit of caution, I want to do the same and make sure that we stay in front of it. Yeah, we're going to know more tomorrow, Michelle. I don't know that either. I did see, and I guess it's worth sharing it's very soon. We're looking at the June meeting, and, the market pricing in the possibility of a cut. And we're seeing this morning, obviously you're looking at regional banks under pressure. As soon as, all the authorities are like, oh, there's nothing to worry about here, all of a sudden you start seeing, almost as Powell was speaking, that situation escalate. And what's interesting now is you see this the pro. Analysts are warning that the regional bank stocks are in a negative feedback loop and detached from fundamentals. What that means is, what they're trying to say is, like bank runs. And we saw with the Silicon Valley Bank, that bank run happened like the quickest ever on record. And it's because of today's communication, right? It is because, I mean, I think that also, what was Peter Thiel going out to all of his, the funds that he's invested in and saying, well, I think you should get your money out of there. That probably escalated things as well. But communication happens much quicker. And what they're trying to say is that basically that, look, there's no problem with the banks. These situations are being almost made up or exasperated by social media and people. I wouldn't be surprised if some influencer out there talking about what's happening, he became or she became like the brunt force of the authorities. And they said that, what happens when things start getting bad is, they begin going after the short sellers. They begin saying that the speculators are causing this, when really from the beginning, it's policy and the monetary system itself. So let's keep going. We're seeing thus far after the pause, markets this morning are in the red. We're looking across the board. Not too bad though. No acceleration of selling by any means whatsoever. They're almost just pausing to see what's next. And what's next becomes a data dependent market. I think we're still in one. We're looking at tomorrow's non-farm payroll. And then we're looking, of course, I think it must be, let's check it out. Is it the 10th? We're looking at the CPI. So next week we have the CPI before us as well. And those are two big ones. And we're going to see what the markets begin pricing in as that all unfolds. I'm going to start today's session off, and it's going to be a really good session. I hope that you're able to stick around to the end of it, because you are going to learn a bunch of new things and you'll be able to incorporate them into your own arsenal and making sure that you are able to conquer the markets. But I'm starting off with this trend line. This is obviously the bear market trend line, right? From the all-time high in November 2021, markets then touched this place end of March into April. And then price never was able to break above it until we had that log scale breakout occurring here in January. And once price broke above it, you could see that there was no other resistance in its way. And price thus far has continued rising in value. There's no question about that. This line over here, I want you to focus on this line. And what I'm going to do is just going to go ahead and just situate it a different way so that you could see what's happening over here. And you can see it's the same exact line. And you could see that over here in September 2021, that was a top. And then that's where the market dumped into. And again, that line is where the market dumped into. They wicked below it over here, but this is where it found support. And again, resistance, support. And then over there, you could see that breakout. I'm going to go ahead and add that line in now over the bottom. And you could see once again where that same exact line is once again providing the structure of the market. And then you could see clearly again over here where it was breaking out, and why even this breakout over here seemingly was a much better entry than the one that we started off with, which was indeed the bear market breakout, the bear market trendline breakout, confirming another repair on these bullish repairs we've seen throughout 2024. It was also tested once, and then almost magically during the banking crisis, tested twice. And thus far, it remains intact. Now, if I go back further, one more line, and I show you keying it off of this touch over here, the resistance here, and then again where we touched over there, you could even say, well, that was even a better breakout. I want to go back to one other one, though, because I noticed it while we were doing this together, and I just want you to see, and that's this one over here. This was the one off of the September high, the second line that we looked at off of these touches. And you could see that this breakout over here, I'm going to zoom in so you could see it very clearly and closely. This breakout over here, this thus far has offered the best opportunity thus far in this, let's say, bull market breakout that's occurred. What we're going to be doing in a second is looking at potentially where that could fade and break down the other way. But I just want to show you this. I want to show you if you were taking this breakout over here and you're using the lowest price point, there's about a 10% move. So let's say, for example, for that 10% move, you're not going to risk probably 10% on one trade. And the reason I say that is because that's just the one that held. If you kept doing this style of trading, you would have had a breakout here that failed, right? That once that failed, well, the second one's over here, but you would have had a breakout over here. That one failed. So you can't be risking 10% of your account on every trade, because if you do, if you have, 5 losses in a row, then you're down 50%. That means you need 100% gain just to get back to break even. So that would be reckless, risking 10% of the account for this type of strategy. If you took this break, where would you have got out, right? Well, that's a good question. We're going to be looking at breakdowns in 1 second. But let me just go ahead and just show you on the upside. Let's say that instead of 10% over there, you were risking 2%, right? So for every 10%, you were risking 2%. And right now you're looking at price up 70%, right? So you'd be up about 14%. That seems like good risk management. The question is, or Michelle, what you're asking is, well, if you did take that type of entry, where would you be looking and where would you place your stop loss? The initial stop loss off of something like that is the lowest price point, right? As you begin the trade. And then what you want to do, or what I would do, is I would be taking that low into that next low over here, right? We've found and we've looked at many times why that is the structure of the market. I'm going to go ahead and lift this up though a little bit further over here, right? And you could see that price coming in, touching over here, touching over here, touching over here. So it's kind of weird. I'm going to go ahead and keep that angle really quick and just see if I bring it up further, if that indeed is where we kind of have been leveling out or not. And I mean, it seems to fit better than if I were to just take it and set a line off that was off the low and then off of this one. What I would do then is clone this one. If I do believe this was a structure, I don't know right now. I'm just kind of having a little bit of fun, and I would take it down off of it hits these two touches again. So I like that line, right? And that would be the low. And you could say that, well, initial stop loss is here, right? And when I exit the trade would be when this line breaks. I don't know if that's something that you'd want to do. I mean, by the time that line breaks, I think that we would be looking at a breakdown of this bull market breakout. I would say to me that it has failed the bull market breakout, and that would be a place that we would be looking then for a test of the low. If that were to occur, I don't know that that will or anything like that, obviously. But if it did, I would say, much like we looked at this line over here together, and we said this was the last resistance in the market, and this is the bear market trend line breakout, right? Where the another repair is taking place in the bull market. We knew that the first repair was much lower, and we made sure that we were there and talked about it, including releasing bull market predictions and whatnot. But just because you have a bull market breakout does not mean it's going to hold. It could actually fail. The failure would be down over here. Now, that will be the latest, just like this is the latest, right? And we looked at what could be earlier. And just because it's earlier, you're going to take many more losses, right? That's why this is called also a conservative line break over here, because the probability of it succeeding is much greater than taking the initial ones, the harder ones. So this line over here on this breakdown, we could lift it up over here and we could look for, what breakdowns are going to be or where the first initial, right, breakdown would be. But I don't think under this circumstance, under this market, that's going to provide us much of an edge. I don't want to be looking to go ahead and fade such strong momentum to the upside. So I'm just going to keep this line down over here, the one that we just placed, and just keep that as a reminder that as long as we're above it, this bull market breakout isn't intact. If we were to lose that, we could potentially be looking at even testing the lows or something even lower than that. Let's look at what's going on in real time and where we are right now as the markets are on a pause, right? We're looking at the NASDAQ, down 0.3%. S&P is red. S&P made up a lot of those banks under pressure right now. The DXY, surprisingly, after the ECB has gone ahead and raised rates 25 basis points. You could see that while yesterday we were seeing the dollar in the red, today on the rate hike out of the ECB, the dollar is break even. We'll look at the dollar the dollar index, the DXY, from a technical analysis standpoint in just a moment as well. I want to start off here with Bitcoin, and I just want to point out that Bitcoin, while we're just looking at the markets being cautious, is right on that important level. We've talked about often the important level over here, 29,000, and why we broke above it recently and then back below neutral. We're just hugging it right now. And we wanted to give ourselves a little bit of room instead of just getting flipped and flopped around. And we added over here this line and we said price needs to close above that in order for a buy impulse to be triggering, right? So we're still kind of neutral. I mean, we're still very neutral. We're looking for a breakdown below this line that I'm highlighting over here, a breakout above this line. And until then, I have to tell you, like, the markets are not doing much right now today. Being neutral is a massive position of power. You don't always need to be in the market. Being out of the market is a position. And right now, it's a really good one because there's no clarity. Even if you look at CTM 2.0 and you look at, we're going to be looking at the dollar, we're going to be looking at gold, we're going to be looking quickly at silver, we're going to be looking at it all. But I just want to point out on the 8-hour, whether you're looking at Bitcoin, Ethereum, or Cardano, we are neutral. And I can't think of a better place to be right now than neutral. I know that there is a lot of, I was going to say noise. There's a lot of chatter about how bullish things are right now. And it does cause a bit of a FOMO from folks. It's similar to the situation that we were seeing not long ago. If you go back 3 months ago and everyone was overly bearish and the noise was almost deafening about what was going to happen, and people started talking about, of course, 10,000 Bitcoin, but also 3,000 Bitcoin and other things like that. I think that guy Soloway, right, the whole time up, he's just been overly bearish and bearish and bearish and bearish. And if we roll over here, well, then he's gonna be like, look, I told you, but that's a big move. That's a 100% move to the upside. That would be the equivalent of Bitcoin going from its all-time high down to zero. I mean, that's a massively long time to be on the wrong side of the market. It continues to be as such. Look, let me just go really quick and just show you in a bull market, this is nothing. Price right now is 7% off its, let's say, bull market breakout high, the 2023 high. It's absolutely nothing. This last swing low was 12%. So thus far, Bitcoin remains very resilient, and the bid in the market, even though you're seeing some larger accounts, some whales, distributing into this top around 29,000, you are seeing relentless buying coming from smaller wallets, and the bid is for sure in the market. There are a lot of people who talk about Bitcoin potentially being this safe haven asset as banks are under pressure. I don't know how much of that is actually true or what to believe. Now, if we did see similar action out of the Federal Reserve, like we did with Silicon Valley Bank, and we saw an expansion of the balance sheet, then likely we would see stocks and we would see Bitcoin and crypto react in kind. I don't know that that's the Fed's intention. We're not seeing the balance sheet rise right now. We're seeing it shrink. And it looks like what they're looking to do is allow JP Morgan to buy up these regional banks at fire sale prices. It looks like what they're trying to do is consolidate the banking system. It's going to make it much easier when the time comes, I do believe, to release the CBDCs. But that could all be some type of conspiracy theory. I know, and I live in the same world as you, and it's quite clear over the last 2 years that almost every conspiracy theory has become conspiracy fact. And I have to tell you, as I've always told you, there are powerful people in the world who are absolutely conspiring together to gain more power. There's no question about that. If you look over into the next bit of support, if we break down this area and if we break the green line, the lower green line, we're likely coming into this support. This support is just above 25,000. It was the third major repair of this bull market. That's a 19% pullback. That's a healthy pullback. If you are really looking at this from a discretionary standpoint, you see during a bull market, Bitcoin pull back 20%. That's the place that you want to then be looking for, I do believe, for any type of resumption out of that, and then be looking for an entry. It's a good risk to reward to take. By the way, if you did test the horizontal line 25,000 and then you saw a price bounce off of it, that's a resumption. That's your first opportunity to go ahead and look for a buy entry. Now, your stop loss would likely be below that support, and that's what you would set the risk to reward off of your trade. Now, another way you could do that at the time, and we could do it in real time, is similar to how you have this line over here showing you when the buy impulse was occurring. However, the price action looked down over here, you could set a trend line and look for the resumption to clear that trend line for it to be the entry as well. If we break 25,000 at that point in time, we've gone from a 20% pullback, and the next bit of resistance is coming off the trend line I drew from the US banking crisis low, from the low over here, right here in January. And that trend line is coming in, and Bitcoin would be pulling back roughly somewhere around 23, 20, 24%. And you could also see there's a bit of horizontal resistance coming in off of right here at that particular time as well. If that were not to hold, then we're coming in towards that line that we just looked at together. I'm going to highlight this line over here, and that line, I'll just draw it off of here so we get a very accurate calculation of how far away that is. And that over there would be a 33% pullback, más o menos, depending on when it happens or whatnot, which is still, for a bull market in Bitcoin, it's just the norm expected, what type of pullback you were to expect. And if any of that was occurring, which we just discussed, I would still consider the structure of Bitcoin to be bullish. If that line was lost, I no longer would consider the structure to be bullish. By the way, just as we put in 4 repairs, this line down over here that I'm highlighting, that was the previous cycle ceiling. That was the first repair. The second repair was the log scale trend line breakout. The third repair was the breakout above 25,000. And the fourth repair, which is neutral right now, right, is the level that price is currently trading at, $29,000. So if you were to come down all the way to this line over here, and I say the structure is still bullish, you would have given back the 29,000 repair. You would have also given back the $25,000 repair, and you would have given up 2 repairs, but the structure would still be bullish. You would still be above the log scale breakout. Now, the log scale breakout becomes irrelevant on the breakdown of this trend line right over here, because at that point it's nullified. You've had a major sell impulse occur. So what I'm trying to get at is the structure here remains quite bullish. I don't think it's a time to be telling people to kind of like YOLO into Bitcoin. That time for us was significantly lower. We called the underbelly breakouts. We called the previous cycle ceiling breakouts. We called the log scale breakouts. A lot of people missing all that, becoming quite bullish over here. We're becoming, I think, more cautious and wanting to see right now whether or not, and you can see from a CTM 2.0 standpoint, right? It's just completely neutral right now. We're ready, if need be, to come ahead and take some longs. I will in just a moment explain to you why you're looking at this green line above the 0 line, the red line above the 0 line, why there's no buy entry occurring right now, why we're kept out of the market. And you can see that we are close. If price were to all of a sudden make a move to the upside, we would be entering on the long side on all 3 of these assets. Cardano very close to entering on the short side, and Bitcoin and Ethereum would need to see some further sign of a breakdown before they would be looking to enter on the short side. It's been quite a few months. It's been since December there's been any short side activity on Ethereum and or Bitcoin, and rightfully so. So before we move forward, let me just also, we spoke about the other day, MicroStrategy. There were a couple of comments asking about whether or not that was real. This is coming from MicroStrategy's earning call. And this is not to say, like, you can't be afraid to talk about things. Like, there's no one, I'm going to say realistically, more bullish on Bitcoin than myself. I'm betting on Bitcoin. I want Bitcoin to win. I believe it's fair and just. I believe the current central banking fractional reserves, they're not even using fractional reserve anymore. It's been completely abandoned. This slavery system is absolutely one of the greatest evils in the world. I believe Bitcoin to be fair and just, and hope not only for our future, but for our children's children's future. There's a long time between what happens right now and the end of this year. There's a long time between what happens now and the 2024 April halving of the miners' reward. There's a lot of time between what happens now and by the time the Fed winds up actually cutting rates down to zero, because or as close as they can get to zero, because there's some type of crisis going on, and then their next massive expansion of their balance sheet and outright asset purchases. And then there's a long time between now and the massive wave in inflation that results because of it. The inflation that we saw back in 2021 and still persists today, that was just the warm-up act. We are undergoing monetary reset, and the cycles are about to get much more violent, much sharper. You got to be able to make sure that you're able to kind of think about critically everything that's happening and do your best to make sense of it and make sure that you're able to position and stay on the right side. No more of this everyone's an expert type analyst where it's like, Pepe coin is jumping up, I'm jumping into it, and it's up only new highs in 2024. And there are a lot of people who think that we're going to be hitting new highs in 2024. Some even think that it's going to be happening over the next 2 months, which it could happen. You want to be aware of everything. I don't know where you think you are right now inside the Wall Street cheat sheet, right? And I happen to think that this was November 2021. I know a lot of people think that top was in April, but this is where the Fed pivoted. This is where the Fed began tapering down their asset purchases. This is where risk assets topped. And then you did see this move up in April. We looked at that move up in April just a little while ago. That was this move right over here. That's where I think we're on the Wall Street, and was this in December and January? I certainly hope so. It is possible, and believe you me, like, I do believe that we are in unprecedented times. And I believe that instead of saying, well, at past times, around this time, we're this close to the halving, here's what happened last time, here's what happens this time. I mean, if we do hit a recession, and that recession is not just like the one in 2020, I don't know how Bitcoin and risk are going to react. I don't know what the Fed is going to be doing with their balance sheet. If the Fed is expanding their balance sheet to go ahead and backstop the U.S. banking system, well, then I think that risk, equities, and Bitcoin are going to be mooning. But I don't think that's the Fed's intention. The Fed's balance sheet right now is going the other way. So I want to follow what's happening and be ready for anything. This is assuming that a recession is avoided. It's a new paradigm. AI is reducing all costs, which is all true, but I think that the lead time on that might be much further. I'm sorry, this is not happening in a couple of months. This is a monthly chart looking at the S&P 500. So this would be the low is in, and this is the price action we're looking into 2024. This could very well happen, by the way, as we move towards the pause of I don't know that we have pause or not. I think that right now we'll find out, but between tomorrow's non-farm payroll and next Wednesday's CPI, whether or not June's meeting is a live meeting or whether or not we just saw yesterday the last hike of the cycle, and then we've gone to a pause, and much like the Bank of Australia went to a pause and then back to a rate hike, anything could happen. If you look at the price of oil, and I want to look at the price of oil with you, you could say that, well, it looks like that we're not looking at any type of inflationary. I don't want to see it from that chart with you. I want to look at it from this one. I'm saying this one, but I can't find the one that I want. So I will. I guess we're taking a breath here. There we go. And you can see, by the way, that TA needs to be, let's say, utilized across all assets. Look at this trade. I know that we have been tracking this and close enough that people are aware, anyone who was trading anything like this. But look what happened over here from the breakdown, the retest, and then the resumption down. From the breakdown into where price took out that low, that's a 15% move. That move is happening in a week's time, right? From the retest, from the breakdown of the retest over here, that's a 12% move to taking out the low. Those are, I mean, the moves just don't come on crypto by any means. And you, as you've seen on ETFs like FNGU, our returns are even greater than they are in crypto. Nevertheless, what my point about looking at oil with all of you was that, you know, right now, why the June, this coming months, I said the May, I didn't say the May. I meant the May's CPI, which is looking backwards when oil was up over here. That could come in a little bit sticky and higher, but it looks like going forward that we should see being CPI come off further. So that would give the Fed the opportunity to look for and move towards, obviously, the pause. That's what I wanted to get into over there. You know, it was like they were gunning for the liquidity down over here. Once they hit it, right? Maybe momentum traders were on the low looking to go, and they got bitten up over here. Very big move, very big bounce once grabbing that low over there. And a really big bounce. It's volatile right now. That's a massive bounce. 7.5%, 8% bounce off of after hitting that low. Let's look across the board. NASDAQ here is about to turn unchanged on the day. And the way that I view this right now is nothing more than neutral. Neutral, right? Nothing else to say and or add to where we are. Of course, I don't need to point out to you, we've done it so many times, about this horizontal line, this trend line sloping upwards, a close and breakdown below that. That is setting off a sell impulse, and that likely could take us down towards the purple. Regaining this green line over here, and I think what I would do, I'm going to do it with you, is go ahead and off of that top, see another line over there. A close of this line and a back above it, I think at that particular point in time, there's a good chance that we go and we look at the resistance above us. It's like equal distance to the next resistance above us, or if we break down to the support below us. And right now, just neutral. Neutral ahead of a high impact news event tomorrow that could likely go ahead and change the course of the Fed. That job market continues to be resilient and comes in tight. And at that particular point in time, Powell is not going to get off message. And then you see the CPI, which is backward looking. Look at a moment when we were looking at higher energy prices. That could affect headline CPI. And then we might be like, well, on a month over month basis, we didn't see inflation come off. Year over year, of course it's coming off. You were looking at nose bleeding heights. So, but month over month, it's not coming off. So at that point, then you could see even potentially June become a live meeting. But looking forward, we're forward looking beyond that. It looks like the data is going to support the Fed being able to back off. So June is still a question mark. It is up in the air. There's no question about that. SEC halts short sales of bank stocks. Soon they're going to blame the short sellers. You're right. So, Craig, well, this is actually really important to talk about. What if they're saying that these bank runs are made up? If all these people are out there placing puts out on these regional banks, why haven't they halted the short sales of bank stocks? Well, I mean, maybe this is exactly what their plan was. I mean, maybe they are trying to blow up these banks. Maybe they're trying to consolidate the sector. I don't know. I mean, I think so, but we'll find out. What else? The DXY. Let's move over. Let's look at the DXY. Let's look at the 10-year, and I'm coming to the DXY in a second on a different chart. 10-year coming back towards the bottom of the range over here. And let's keep forward. Let's go forward. This is looking at the NASDAQ from a linear standpoint. And all as I see over here is basically price is consolidating and it's quite neutral. I don't see an edge either which way. We're into support. We could see that horizontal support over here. Looking back at the NASDAQ from this view, though, I would say we're much more neutral in between that extension of this consolidation pattern that's occurring. So we wait for a breakdown or a breakout. And until then, we stay on the sides. That could come tomorrow. Tomorrow could be the catalyst that pushes it one way or the other. But I don't see opportunity here right now. I was talking about looking at all things in MicroStrategy, and this is coming from their most recent earnings. And all they're saying is that they are having trouble. We believe that our existing cash and cash equivalents held by us, right, is sufficient to meet current working capital requirements, right, for at least the next 12 months. That should be highlighted. Beyond the next 12 months, you're talking a year from now, right? A year. We have the principal due about blah, 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 $2.2 billion. We do not expect as of March 31st, 2023. We do not expect to have the cash and equivalents generated by our enterprise analytics software business to sufficiently satisfy these obligations. As a result, we may need to satisfy these through selling of common stock, borrowing against our Bitcoin, or the sale of our Bitcoin. And that's all that they're saying. A lot of people talk about Microsoft's liquidation being down around 3,000, but it is potentially a lot higher if we don't know what's going to happen with Bitcoin, right? When I say we don't know what's going to happen with Bitcoin is I don't know whether or not we're going to maintain and just keep going over here and tag something like before the halving 50K. And if we do, I'm sure Microsoft will have some breathing room over here and even letting go of a little Bitcoin, 100% over their purchasing price is going to feel good, look good, help them meet their debt obligations. And that's all responsible. All I'm getting at is if Microsoft needs to sell any of their Bitcoin, that's not really a bad thing whatsoever. That's actually a good thing anyway. The more evenly distributed Bitcoin is, the more I am for it. So what do I keep saying, Yamato? Could someone type in what I keep saying? Because I'm not saying MicroStrategy. I think I'm saying micro Bitcoin. That's been a long time since we've had some type of classic like that. All right, jumping in. Light on likes on the 40. If you enjoy being here together, go ahead and make sure that you do hit the like button. Let's look at the DXY. I could extend this yellow line out, right? Because it's hugging that trend line that it's seeing. Price is yet to close above it. It sure wicked above it, but not closing above it on the daily. And that has kept us out of trouble where some people might be looking to take this number one buy impulse or this number two buy impulse. We had the presence of mind. That's discretionary trading right there, using discretion to keep ourselves safe. I think at this particular point in time, I think it makes sense to go ahead and readjust this line and Microsoft. That's great. So, yeah, I don't even think that's necessary. I think it's still just a close above this resistance. I'm unsure. And you know what? When I'm unsure, that means I'm just going to give it more time. On the downside, though, we're getting close to potentially looking at a breakdown. What would that look like? What's the best way to do that? I'm not really sure. I want to try to get sure. I want to try to get that as clear as possible. We're looking at the dollar having a difficult time with the debt ceiling debacle going on, finding any type of footing. I'm going to put a horizontal line over there and a drop below. At that point, that would signal a resumption. So this is quite bearish at the same time until we break below that horizontal. I would not be looking to really reestablish that further downside, that next leg down, a close below there, and it could come tomorrow and it could be a dump down. I could miss it. You don't get every trade, but when things are unclear, things are not always clear to you. When things are not clear, the best thing you could do is recognize right away that things are not clear and that you need to step away and give it more time. If you're trying to force things, more often than not, it's gonna wind up not working out well for you. Yeah, it's having trouble breaking out to the upside. It looks like it's fragile, and I'm kind of leaning in heavily towards what's going on with the debt ceiling. And we know that we're on the clock. We're getting closer. That's going to continue to put pressure, I do believe, on the dollar. ECB, regional banks, not much else to share over today. Today, we did see that initial jobless claims jump to 18-month high, but tomorrow's the big print, so I'm holding off. I'm holding off on that. And then there's just this is signal. It's not noise. When you look at, whether it's ChatGPT or further AI, and especially moving out 2, 4, 6 years from now, we are going to see a new paradigm taking place. I don't think it's going to be over the next 6 months that you start seeing people's jobs and all these workers replaced to such an extent that it's going to have any type of massive effect. One thing that's happening in this bull market that we're seeing, or I'm not calling it a bull market. We've been tracking what's going on with the equity markets, and we've been tracking them for quite a while now, right? The first major repair we had was down over here. And then we saw two people get it very wrong. We saw Michael Berry tell everyone to sell, and we saw Jim Cramer tell everyone to wait for the dip, then to buy. And neither one of those things happened. But then we had the second repair, and we remained with that bullish bias. But too soon for me to call this a bull market. For me, no, not at all. But if it were a bull market, one thing that is noticeably peculiar is that basically you're seeing, and the indexes are made up and heavily weighted towards just a few, and it's just a few that are really carrying the equity markets. The breadth is absolutely horrific. It's terrible. And you can see I like this little meme down over here. We see the S&P 500 above the water. Everything else is struggling to keep their head above water. And then you see the Russell 2000 sinking, and that's a good description. It also makes you think that if you were heavily invested into stocks and into the stock market, and you weren't using something mechanical like CTM 2.0, if you should be really kind of hedging yourself where you are long the indexes and looking to take advantage of weakness through individual stocks. I think that's the way to go. Let me go ahead and find some type of way to put this on focus. There we go. All right. Let's keep going. Is the VIX pumping here? I'm seeing over here. This is also just helps you to zoom out a little bit. And you're looking here as that first breakout, that second repair, all in place. And this is the most important line. If that were to be lost, that's where I would be signaling the first potential area that we could be seeing something like we've saw in the past during the bear market, where that was rallies and then resumptions. This was the first one. The resumption down did not make a new low, right? And since then, any type of sell impulse has actually led to a new high. A breakdown over here, though, of this rising wedge in a bear market That's something that I would have cause for concern. I know down over here, we saw Peter, Game of Trade, showing us fractals about what happened when you broke out that bear market trend line, how they rolled over really quick. The same time of premise holds, right? That's the problem with fractals and trying to line them up perfectly. You got to follow what's going on with price, but you could see the same type of behavior, except it's just been a longer consolidation here in that wedge. Jeff, I look forward to this time of day with you all so much. And yeah, this is going to be, that's awesome. First of all, the fish, anyone who's using, if you're like, if you write copy for people, if you're a tutor and you're embracing these tools and incorporating them into your service, I mean, machines, I don't think so, are going to be able to replace the human relationship, the personality, the connections that can be made. By the time those things are able to mimic and show emotion, I imagine there'll be a lot of people that get lost into that and whatnot. But, the human connection, the human experience, that's everything. And using these tools to your advantage, that can only make the service that you offer superior than to those that your competitors around you. I think that's a really good thing. Gold and silver, we didn't miss it at all, right? A lot of people right now, you could see that we are looking at gold testing the top of the breakout of the cup and handle. And I'm noticing today a lot of gold managers are selling gold up here. Now, obviously, they hold physical gold, so they're just taking a position, and you could call it a trade. You could call it a swing position just against their holding as you come into that resistance over here, that resistance that since July 2020, gold has not been able to break above. It seems counter trend to me. Why buying gold up here is late, but if you are, see, the way that I look at it is right now you have a lot of momentum favoring the gold trade. Most importantly is the debt ceiling. Upon the resolution of the debt ceiling, we looked at in yesterday's session how back in 2011, that was the top of gold. So the bull market of gold that began in 2000, it ended when the debt ceiling was settled last time. That doesn't mean that that's what's going to happen again. But if you did see gold break out above here, and then you saw June, July, some type of resolution, I would watch the dollar and I would watch gold. That might be a sell. And this pattern over here that we're looking at, this cup and handle that has much higher expectations of where gold could go throughout the rest of the decade, you could see a breakout over here, a resolution of the debt ceiling, and then a failure back down. This could get a lot of people into it, and then this might break down, and it might be some time further. I can't time it and tell you the time. We could do it in real time and pick our spots as best as we can, but you could have a potential fake out over here, and how far to the downside that would bring you, I have no idea. We'll have to take it as it comes, and it could be sometime later that this pattern ultimately breaks out, or this could be it also. I mean, you could break out and the debt ceiling could be resolved, and they could just look at that as the printing of and devaluation of the further dollar, and gold during this coming slowdown could stay bid until after the in a credit event. In 2008, gold came off 30%. In 2020, gold came off 15%. Do you notice a pattern there that, gold comes off less and less? So that's my look at that. I don't think that this is a place to sell gold over here, even though you're into the resistance. To me, first of all, I don't sell resistance. I sell rejection of resistance. So that would be something to look at. I also don't think that this is a place you buy up over here. We did this on a swing trade while we bought over here and then exited over here. This was the place if you had a bigger perspective, which I didn't have at the time. I wasn't looking at gold from the vantage point that I should have. And if I were, I think that I would have recognized coming out of the handle as being an opportune time to take a position and push and hold it. What I'm getting at is today, though, zooming in, and by the way, silver here looking very good. We saw that trend line break. Since then, it's broken out. It's coming in for a retest. That retest was horizontal. It didn't even come in and test the trend line. So it's showing strength, and it's trying to resume above right now over here, right? Next leg up could see silver put in a big move. You could see silver move up towards even 28, right? Got some resistance, lighter resistance, 26 and 85 cents. And then even towards 28, it would not be surprising. I would not be surprising for gold to break above here. Again, you have a lot of people adding, fighting the current over here. The trend is up. Why? This is not a place to look for a buy, and the buy rightfully should have been down over here, or on the retest and the resumption off down over here. And maybe you could take a little profit into this, but try to push it for the big one. I don't think it's the time to be selling. A sell impulse on gold. Let me get off the weekly and just come down to the daily. I'm going to draw in a trend line over here. And, this pattern remains strongly intact for now. And we would need a breakdown of significantly lower levels before I would looking to sell gold. You're much better off trading with the trend than you are trying to trade against it. I imagine a lot of conditioning has taken place as, you're looking at, first of all, if you're a gold bug, right? You're looking at gold here for 10 years going sideways, doing nothing, right? By the way, this was the time to buy. I missed it. I made such a big mistake listening to other people and not really forming my own opinion well. There's Jim Rogers talking about gold if it were to go down to $1,000, how he hoped he would be smart enough to buy. I mean, guys, you can't pick a level like that. You got to also take responsibility for every single decision you make. You should consult all views and use them to firm up and make your own opinion. This is, anyway, obviously times to be looking at gold down over here. People that are looking to buy up over here, unless you have a long-term horizon, and by long-term horizon, I'm talking about over the next decade, I do think we're going to see gold do some pretty big things, but between the timing, it is everything. That's what we're trying to do here. So I hope we got that across well today. If I did, well, go ahead and hit that like button. I do appreciate it very much. It does help the channel. It fires me up, and it's much appreciated here. There's just another view of the dollar. You could see over here on the daily view, just simple trend line sketches, never getting above it, as well as this is log. We were looking at linear before, not able to close above it, rejected. And then it looks like that, less and less and less buyers. Are we going to be able to see sellers make the leg down? CTM 2.0, probably the most important part of the session here. I know we've been going at this for about an hour, but listen, whatever's required for us to put the work in, that's what we're here to do. This next section is going to be high signal. Make sure that you're paying attention. We have Bitcoin, Ethereum, and Cardano on the 8-hour time frame, all completely out of the market and neutral. Question comes up about what it looks like here for criteria to buy. Of course, whether you have alerts set up, right? Whether you're following in the Discord, the alert channels for the confirmations on the 8-hour or the daily time frame. You want to know what you're looking for, right? And a couple of things I want to start off going. The like button, please. The like button, please. The like button, please. I didn't even see, you gotta, all right. That was just me buying a second to give myself a second win because I have a nice little section set up here And I want to make sure that it comes across really well. A lot of people would think over here we're following a momentum-based system. When you get the opportunity that you have both deviations lined up above zero, that is the time to buy. Well, that's not the case. What we're looking for is the CTM filter to be active when that occurs. And when buying, it needs to be green. Right now, you can see the CTM filter is actually red. That's bad news. That is what you need for a sell trigger to happen. Let's look at it. First, let me go ahead and start like this. Boom, 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 boom. Right? I consider a get ready. We might be entering a trade indicator. What was specifically asked about crossing zero? It hasn't been explained anywhere unless I missed it. Usually crossing zero is an entry or an exit, but that doesn't always seem to be the case, so I'm not sure. It's kind of a momentum indicator. For instance, Bitcoin crossed zero to positive a few candles ago, but we didn't enter a trade yet. What's going on? And you could see, for example, right over here, right where my mouse is, you could see that we have a cross above the zero from both deviations, but there was no entry. And that's because at that particular time, the CTM filter was not active. If it were, you would see this green background image over here. If I go ahead and I look, you could see that, right? Another thing, it says long enter on the cross of the zero, and that's not checked. What that does mean is you could have an instance where upon the cross of both deviations that you don't have an entry, but on the next bar or the bar after or the bar after, if the CTM filter does go active at that particular point in time, you will have an entry. So it doesn't have to be on the cross itself. It's whenever you have that double positive and then the CTM filter goes active, that would be an entry. However, on the short side, that's not the case. On the short side, you could see that's checked off. And what that means is that at the particular time they both cross to the zero side, at that particular moment of the close, the new bar, they need to have that CTM filter active, or that means that there's no trade at all for as long as price stays it. Let me come over to here. You can see on this bar over here that you took a short entry, right? And then you were stopped out of the trade. That you were stopped out over here. So there's no re-entry. This whole period over here, until price crosses back above and resets it, there's no further opportunity for an entry. So it's what I call like being left out naked, because if price were to drop down even further than it did, you're simply out of the market. Now, you could look at that, and again, just before I move forward and explain to you, that's because this is checked off. On the long side, it's not checked off. This is for our Bitcoin preferred settings, and that means you could have re-entries at any time on the long side, not so on the short side. Now, we do have different variations, different highly valued candidates of Bitcoin, and some of them have different settings. Let me just go ahead and just show you. This is looking back from 2020. So you could see Bitcoin 104, which is our preferred setting, has a return of 1,700 with a drawdown of 17%. Why CTM Classic, it only has a return of 1,000% with a much higher drawdown, 26%. But I think for a lot of people, that would be a system, an edge that they would really, really want. Ours is just, we prefer the lower drawdown. We prefer, in this case, the higher return. It's not always the case. But look at this version. And these are all highly valued versions. They're all fantastic. And we monitor them going forward because our expectations is going forward, all of them will continue to outperform. But we want what performs the best in all market circumstances, is the most consistent, offering what is maybe not the highest return, but the best return with the lowest drawdown. You can see BTC 103. I mean, this is a solid performance, right? It's very close to our preferred setting. If we go back in time further, you'll see it changes. But this setting does not have, this allows for re-entries on the short side. And you could see in that area that we just looked at over here where stopped out, it then wound up re-entering the trade. It just so happens, though, that these preferred settings are not as good as the ones where instead of having that checked off, we allow for re-entries on the short side. All right. So I just want you to understand what that means as far as the CTM filter. And on the buy side on Bitcoin, it's different for each asset. On the buy side on Bitcoin, not only do you need both above zero line, you need the CTM filter active. By the way, that CTM filter, it's a big deal. What do I mean by that? You're looking here, coming back into, let me shut off the filter, right? So we're looking back until 2017. And you can see that's a wild return and a really, really strong drawdown. If I take off the filter and you just entered and exited when it went above and below the zero line, I want you to see the return difference. I mean, that's a good return. Most people are happy to keep drawdown 30%, 28,000% return. That's over 5 years. It's bananas. People would really like that. But do you see the massive difference that the CTM filter makes? You're talking a 28,000% return compared to having, with the filter on, an 82,000% return. It's not just on Bitcoin. It's the same thing on Ethereum. Before I show you that, I want you to see in 2023, the return on Bitcoin, 25%. I want to compare that to some now highly valued candidate versions on Ethereum. Now, we have on Ethereum actually 9 highly valued candidates. Here are 6, and then we're looking at our preferred version over here. And I just want to show you how they have thus far performed in 2023 over the first 3 months. And we could see that compared to the 25, that we are roughly in sync, with BTC 104 outperforming a little bit, right? So, and again, we want to see them, all of them, continue to outperform. BTC 104 has a 30% return over here. We're looking at our current best version having a 25%. Let's look now from 2020. So BTC 104 had a 13,000% return, 24% drawdown. What does our preferred version? They're all highly preferred, but our preferred version, right? So it's 13. This is much better. 18 to 14. There was something else I was looking at then, and I just want to make sure that we get to see it. All right, well, BTC 100, that's outperforming. That's a 19,000 with a 14% drawdown compared to 18,500 with just over 14, right? If we go back even further, though, if we look to 2017, again, they're all highly valued. It's why others are preferred. So if we add in, maybe I need to go to the top of the bear market. That's too much. I think this is where the way I did it over here, and I'm going to show you a second what BTC 100 looks like. If I come back a little bit for BTC 100, because it's outperforming by a little bit, 700% and a little bit less drawdown. If I come back further, though, I'm looking at, and I'll tell you the year in 1 second. Yeah, 2018, you're looking at a 21% drawdown and a 216,000 versus our preferred candidate. You can see the higher now return, and the drawdown is roughly the same. So if we went back further, and because again, what we're not trying to do is just over like the longest period of time, what has the best return. No, what we're looking for is quarter over quarter, year over year, in any single time scalping frame that we could find, what is and offers the most consistent, because all the returns are absolutely fantastic. By the way, what happens if you turn off the CTM filter over here? We're looking at Ethereum from 2018 to today, the drawdown 21%. If you take off the filter, you can see that the drawdown rises to 34% and the return is diminished down to 60,000. So that's why the filter offers an immense immense edge. That was upon the release of CTM 2.0, right? It was said the day it was released, March 14th, 2022, if this is a momentum-based system, if at any time we're able to find a filter that is able to filter out quote unquote bad trades, that would indeed be the holy grail. Soon then after, Reza was able to introduce the foundation of the CTM filter. And then it was the hive mind over the next couple of months who really refined it and made it its unique ability that it is today. Absolutely massive, massive. So I hope that explains what we're looking here for on entry. If there's any follow-up to that, AJ, please let me know so that we could go ahead and help fill that in. Right? AJ, I would really just let me know after you watch this. I'll include that clip in the Discord so you can see it. And then if there's any advantage or anything else that needs to be clarified, let me know. Next, the daily. Let's move over to the daily time frame. And oh, by the way, I just came across this tweet before going live. And it says, investing is easy, right? So the sarcasm. Just buy quality compounders and wait. Take Amazon, for example. If you invested $10,000 in Amazon September 2018, you would have roughly $10,000 today. Good enough for a 0% 5-year CAGR. See? Easy. And that, listen, if you were to look at Amazon a year ago, and you would have been looking at what the average compounded growth rate was, and it would have been significant. And well, that's the thing too. I mean, you don't know what is going to happen on Bitcoin. I root for Bitcoin and I want Bitcoin to succeed. However, you don't know what is going to happen. And when you're talking about developing a potential investment, a strategy in order to kind of head and build your nest egg on, I think that you could do better than simply buy, hold, and hope. Well, I know you can. The 8-hour time frame, it does require a lot more, let's say, commitment, because there's 3 times a day that you have a potential signal. Now, granted, for the returns that you were just taking a look at, obviously it for some is worth it to do. For others, they prefer the daily time frame, right? And the daily time frame provides tremendous results. The buy side only is enough. By the way, on the daily, Bitcoin remains out of the market. Thus far in 2023, absolutely crushing it. Ethereum in 2023, barely profitable, up 5%, holding a trade, minus 2% into profit. And Cardano hedged. This is the beautiful dance between the three. We're looking at Bitcoin out of the market. You're looking at Ethereum holding a short position during this uncertainty. I don't know what's next on the markets. And Cardano hedging that with a long position. When people talk about what they're, just buy quality, compound and wait, it's that easy. Well, you could do better than that. You could put as much, let's say, have a higher probability of succeeding by really working out an edge in your strategy to give you the opportunity. Let's look at, I want to show you really quick the difference between Ethereum and Bitcoin. And if you're looking since 2020, you could see the return on the daily time frame. I know that we looked at 18,000 on the 8-hour time frame with a lesser drawdown, but this only requires once a day versus Bitcoin in that same period, right? So you could see that Ethereum offering greater alpha on the daily, on the 8-hour. But what happens if you were just doing Bitcoin? Oh, I'm sorry, that was on the buy side only. So Bitcoin compared to Cardano, Ethereum. And again, from a drawdown and a return perspective, Ethereum offers greater opportunity. But I want to show you looking at the weakest. Cardano's return is much bigger if we look than Bitcoin's. If we look at this from 2020 on the daily time frame, buy and sell side on Cardano, significantly higher than Bitcoin. So I'm looking at the weakest link. And I say weakest with a grain of salt. If anyone was able to, in the last 3 years, having the opportunity to average 12 trades a year and put up a 1,300% return with only 18% drawdown, they gladly would have paid taxes, because 3 years ago, Bitcoin was not like, what's the buy and hold return on that? Let me go ahead and show you. 300%. That's pretty good. I didn't think it would be that. And I don't think it is. So I want to check. Oh, okay, here we go. That's going back to 2020. So right now we are in March. That would still hold true. I said we're in March. I'm fading out. We're in May, right? So you're looking at a 300% gain. That's pretty good for buy and hold, right? If you would have started doing that a year later and you started in March, we're into May of 2021, well, then obviously you're underwater. So that's the difference over there. But the point I wanted to make was that you don't need to do this only on the buy and sell side. Spot Bitcoin, buy side alone, is more than enough to get it done, because you're looking at over here when people say, well, just buy quality and compound it. Well, what rate are you trying to compound that year over year? Bitcoin over here, which we see is the least effective out of our arsenal on the daily time frame, buy side only, is putting up such a return that, do you think that you'd be able to meet your goal, and whatever that goal is? And what is your goal? Are you looking to do 30% year over year, right, for the next 10 years? Do you think that Bitcoin is going to get you there, right? This was nothing spectacular. Let me take away 2020. Let's start in 2021, and there's nothing spectacular about this price action whatsoever, because we're getting rid of the bull market, just like in 2017. So 30% a year, last 2 years, are you getting it done? Are you making it? Or are you actually doing much better than that, right? And what are you trying to achieve, and what's your plan to get there? No, there's nothing easy about it. But you could do a lot better by going ahead and spending your time developing an edge that is going to give you the opportunity to get it done, to meet your goals. That's the point we wanted to make. Automation is super easy. The problem with automation is it brings in a whole new sets of issues and problems. You saw in last year, 2022, 3 commas had API leaks. People lost a lot of money. The whole idea is capital preservation. You can't grow your money if your money's at risk. Your money's always at risk, but you want to reduce those risks. Automation is very easy to set up. Very easy to set up. A lot of people in 2022, myself included, was just fully automated. After the 3 commas leak, I prefer manual. I prefer safety. I know that at X amount of time in the future that we will have safer, better practices. I know 3 commas has gone through great lengths to kind of secure up their security. And you could whitelist certain assets, and there's different things you could do to put that on your side. Automation is easy, but you have to understand the risks that are involved when you move towards automation. API hacks. All right, fam. Yesterday we had 100 likes. I prefer the manual. It's when you're talking 3 trades a day. By the way, big implant into my mind. Last night, mom staying with us. We got 6 kids, and that means that you don't sleep much as a parent. Had to check in my mom in the middle of the night, so I'm lying in bed 4 a.m, and then I'm thinking about like the things that I think about, and one of the things I was thinking about was working towards what is a hybrid between the 8-hour and the daily. Flavius Frav has been the leader on this, and instead of using the 3 signal periods a day on the 8-hour, just using two of them, because the returns then are even better than the daily time frame, and it gives people, listen, if you're executing once a day, these returns are such that likely you're going to get it done more than you ever dreamed possible in the markets. But if you could improve on that with a little more work and do 2 signal periods a day instead of the 3, maybe not reach the returns that you had here on the 8-hour, it still offers significant advantage. So Andrew's gone ahead and set off the moat templates that would include that. Flavors Frav has done a lot of the scouting work already on that. That's something that we need to really work in and move toward and have that ability, for those that wish to execute off of that. I didn't get a chance to take a look at stocks yet as far as our CTM 2.0 perspective. I'll do a bigger segment on that tomorrow. For now, I just want to wish you all a wonderful day. Thanks for putting the work in. Thanks for being here. Markets here on the Fed pause are pausing. The markets themselves are pausing on the pause. And it looks to me that they're signaling to us that they are data dependent, that they believe then the Fed is data dependent. If the markets believe what the pause does, it like sets a time to refresh, to extend the cycle further. What the Fed is trying to do, besides distributing money from one portion of the population to another, from the middle class and the poor to the elite shareholders of the central banking system, to the politicians that are their puppets, what they're trying to do is extend the cycle as far as possible. The pause in the rate, they're not trying to crush it like instantly, because if they crush it, they have to come back and reinflate it. It's the only way to keep the music going. By pausing, it gives the markets a time to refresh themselves and continue forward. If for any reason on the pause, we get some type of adverse signal and a technical breakdown, you want to be ready for that and you want to be aware. Going back to that fractal Peter showed us from Game of Trades, right? When you break above the trend line and then bam, it's the same thing happening, except look, it could be on this trend line, the purple one. Same concept. It's not always the same. You got to be flexible. Everyone, have an awesome day. I'll see you all tomorrow. Fun Friday. Everyone, God bless you. I'll talk to you soon.